Let's talk about the market going forward. Amit Shah is joining us from BNP Paribas. Amit, good afternoon. Thank you very much for your time. I saw a very interesting report from your house, Bharat, in terms of work from home and beyond. Before I talk to you about the strategy, want to understand how are you analyzing the market or investing environment right now in terms of valuations and the factors which are at play, both the large cap universe as well as the mid-cap universe.
Hi, thanks for having me. So the market definitely is benefiting from the liquidity rush that we are seeing globally. However, in India's term, the fundamentals have kind of lagging behind. If you see from April to July, the recovery in all the high frequency indicators that we tracked had been pretty solid. But August once again has started to see some amount of weakness come in, especially say unemployment numbers were largely flattish for July over August, which is a bit of a concern. And that is also because of the underlying pandemic, which is now rapidly spreading in the rural areas. So having said that, we don't expect a material downside. In our report also, we highlight that now based on our analysis, we kind of see around a 7 to 8% downside from current levels, and that is in our bear case scenario. And we expect our house estimate for the Sensex is 41,500. But on a sensitivity basis, if you see that if the liquidity rush ensures that we trade at least one standard deviation above the 5-year mean, you can at least see another 10 to 12% upside from current levels. So we are still more biased towards the upside, and that's where we believe I think the market's headed. You should use. There would be some corrections in the near term, especially as we get into the US elections, because things will get a little volatile, as we saw in the last 2 to 3 days. But overall, I think from a next 6 to 12-month perspective, I think the upside is probably where our bias is.
Right, Amit, explain to us the bucket which you call Bharat and what kind of plays comprise of that bucket which you are recommending in your strategy report to be played if you want to go long on India.
Sure. See, the Bharat basket is more. It's a basket by itself as well as a theme. What we are trying to convey here is that unfortunately India historically hasn't been able to create businesses of tomorrow. Probably Reliance is as close to it as we can get, and that too that's happened in the last 3 to 4 months. But from an investment perspective, you'll have to probably go 20 years back to see an investable sector like an IT services was the last investable sector of its kind that grew in India. And that is largely because India's biggest strength is the population. We got around 1 billion odd people, and the Bharat basket is a basket that is people-centric in nature. And this is what in India will be businesses of tomorrow, and it has been businesses of yesterday also. So this Bharat basket is a basket of stocks that have the ability to reach that billion people. All are global in nature in terms of IT services. And that is where we see the continued valuation as well as multiple re-rating happening in these stocks. Because it's the polarization that in India we expect it to continue going forward. And also because there are very few companies that can potentially challenge the leadership positions of all these companies in their respective sectors. And as I started by saying, the fact that India has seen polarization right from 2008 levels. Since 2008 to 2020, if you analyze the Nifty, you will see that 6 stocks have presented almost 60% of the outperformance by the Nifty. And if you include Reliance in this series, then probably that becomes the 7th stock. So that is how difficult it's been, and that's how stock specific it's been in order to beat the market. And the Bharat basket effectively is an extension of that we believe these companies are businesses of tomorrow, as they have either repositioned themselves, as you see in the case of say a Reliance or a Bharati for that reason, or are historic, stable, sound businesses which have the distribution reach. And that's actually a very simple logic behind that is what we are pushing with the Bharat basket.
Right. Amit, Reliance, deserves a bit more, attention given the way today it hit the 200 billion market cap, the way suitors are lining up for its a slice of retail business on top of what the amazing fundraising which they conducted in Geo. Any thoughts on this one and the impact earnings of Reliance and the movement in that particular stock will actually also likely to have on overall market over 12, 14, 24 months, even long term?
See what happens, and this is exactly what the Bharat basket is about. It's about companies that have such meaningful stronghold in their businesses that earnings upsides will happen with the business cycles, but the multiple valuation re-rating is what happens consistently for these companies, which is what we are seeing with Reliance as well. With Reliance, what we are seeing is that if the numbers that especially what ET has kind of flagged in the morning today, what the numbers like, say for example, 40 billion $20 billion is what they want to sell off, which kind of roughly translates into say a 40% for the retail business. That's actually not too far away from our valuation of the retail business on an FY23 basis, but it's also the function that you're getting marquee investors. And increasingly, the impact that the digital businesses as well as the retail businesses have as a percentage of the whole RIL pie increases, which is where you see that multiple re-rating happen. So the farther away you go from O to C, the more valuation you kind of command as an overall business. And also then you have these multiple catalysts that you're lined up, like the retail stake sale being one of them.
Right. Let's shift focus and talk about financials, because after all, financials also has a big weight on the markets, and over there multiple stories are playing out. PSUs are losing market share to private ones. Retail end of the large corporate large lenders got a bit shaky. Corporate ones of course are sitting on the side, but the good thing is that almost every big player has raised capital and showed their balance sheet. Your thoughts on financials and how to play that?
See, financials is something that we have been very positive on. Actually, we do something called as an on-the-road product, where we actually go to different parts of the cities across India and talk to people to get views on what is the on-the-ground scenario. And there we are actually seeing things are improving. And the benefit, it's just that I think the overall market fear with regard to loans under moratorium, and also the fact that India has a very long tail in terms of lending. And that is something that everybody's worried about. But I think the restructuring that the RBI offered a one time, that will probably go a long way. I think the near term overhang is, of course, the Supreme Court decision on interest, which has now been deferred to September end. So I think near term there will be some bit of challenge, but I think financials from here on, if the market has to rally, should be the leader of the pack. I think it's time for financials now, considering we have seen a broad-based rally across some of the sectors which tend to benefit.
It's not on the direction, but the factors which are playing on it. Do you think that this last 3-year shadow which it went into, be it a correction, global COVID-induced correction, or even we started correcting 2018 January onwards. Do you think the way liquidity globally is pouring in, dollar index is kind of corrected badly, emerging markets have started looking upwards versus developed markets, the case is building that the structure of the market from absolute pessimism may have turned neutral, and they may have started to looking upwards, the structure, if one even wanted to take 3 to 5 year view? Does it appear like that?
Absolutely. To us, it does. I think every time that liquidity has been a driving force for emerging markets, right? It's the consistency and the predictability of the liquidity that becomes very important. And I think the Jackson Hole meeting in that ways was a big comforting factor, at least for emerging markets, knowing that this time you will not see something like what happened in 2013 in terms of a taper tantrum. So this time around, I think the structure is all in place. Like, even if I had to digress a little bit, like if you see real estate cycle is improving now, despite we being in a lockdown, affordability index is back to 2003 levels. Now you got cheap liquidity. So all of this is kind of making together, has all the ingredients to make for a good sustainable run. I think the near term is only going to be run by as how soon can we flatten the COVID curve. I think once that happens, I think you will see the sum card, all of this kind of play back into the markets.
Right. And your view on the mid cap end of the basket, what kind of themes do you like there, valuations, etc.?
So in the mid cap space, I think some of the themes that we are very bullish on is on the insurance space. I think that's something that looks very good. I think auto ancillary has run up a little bit. but there is some more room, I think, in select auto ancillary stocks. Otherwise, in the mid cap space, we continue to prefer some of the tier two consumption names as well.
All right, Amit, we'll let you go on that one. Thanks so much for joining us on the show today. In fact,
Thanks a lot.
those